What's wrong with the infinite banking concept, right? Or IBC? What's the problem with it, right? You know that's no secret. I like it. I love it. But is there a downside to it? That's what I want to dive into today, because it's not all sunshine and rainbows, right? It's actually, there are some things you got to be aware of. So let's talk about it right now. Okay, so it's no secret. I'm always, happy to talk about the infinite banking concept because it's a cool concept, especially when you use it with passive investing. But there are some things that are wrong with the infinite banking concept that I don't agree with, especially because there's so many YouTubers out there teaching certain stuff that make it sound too good to be true, because the way they talk about it, it is, because they're lying. They're trying to throw out all these myths because they have crappy policies that they set up for you, and they're trying to lie about it so that you convince you to want to get it, that you want to pay them that much to get those things. So there's a better way to do it. So number one, here's one of the big myths I hear about the infinite banking policy is that you want to use it to pay for everything, right? It's like a bill pay account. People talk about, they're saying, hey, you can pick up all these little extra dollars of interest by cashing out this money, borrowing the money from the insurance company to use it to go and pay for bills. Now, if you're not sure what the infinite banking concept is, by the way, it's actually using whole life insurance. Now, whole life insurance is not just death insurance. Although it has that, it also has this tax-free savings account inside of it, this cash value account. This money is accessible. You can withdraw the money, but that's not what they teach in the infinite banking concept. They teach you to instead borrow from the insurance company. And by the way, it's a private loan. It doesn't show up on your credit report. You don't even have to have good credit. You can use it for whatever you want. There's no limitations here. But you can borrow most of the cash that you have over here. You can borrow from the insurance company because they have the cash already in their own hands as collateral. So you borrow from them. Your money's still in there earning compounding tax-free interest. That's the key with this infinite banking concept. But when you borrow the money, you are paying the bank and the insurance company interest, right? You're paying them interest back. So what they'll teach you is borrow the money from the insurance company, then use that to pay for your bills each month. What you do is you're using that money to cash it out, and then the money you would be making that you're coming with paychecks, use that, pay it back in. Here's the problem with that. One, that's like having another part-time job. It's complex, it kind of sucks. And whenever I've run the numbers, it's like, wow, I made myself an extra 20 bucks this month. Who gives a crap? It's just not worth all the pain and hassle. You'd be better off just working extra time at your job and doing something you actually understand, right? That's a big one for number one. Again, I'm not opposed to using the money, but not like that, not that often. It's just too much headache for the little value that you get. That's one problem. Two, insurance companies don't want you to do it. There are big companies out there like MassMutual that publicly rip on infinite banking. Now, here's the interesting thing. MassMutual is one of the companies we're licensed with. We still do infinite banking, but they don't mind it because it's not that bill pay type of thing. Because here's what they're afraid of. They're afraid of that you're going to get this big policy. And let's just say you make $5,000 a month. Then you're going to say, well, to do that, I should probably be putting in maybe $4,000 or $5,000 a month. Well, I'll tell you one thing. For one thing, insurance companies will stop you right there because they'll say, wait, if you make $5,000 a month or $60,000 a year, you try to use this policy. If you try to pay that much in the policy, you can't afford it. They'll say, no, you shouldn't put it any more than probably 25% of your income. Some will even get more nitpicky and say even less, depending on the company. So if you make $60,000 a year, they won't let you put in more than $15,000 a year. So you may not be able to do that kind of strategy as easily as you thought, right? That's one problem right there. They do not want you dumping all your cash in because those people have been proven to cancel their policies because if something happens, they get laid off, they don't have any money, they lose the policies, and the company loses money because it takes them a few years to make that money back off of you. So just be aware that they don't like it, right? And I don't like it either. I think it's a waste. So don't do that one, okay? The second thing that I see is wrong is that you'll see them talking about buying your cars or buying your houses with it and things like that. Now, you can do those things. You can, instead of going to the bank and getting a loan from the bank, you could go and get a loan from the insurance company and go buy a car. The interest rates of whole life insurance right now, depending on the company, can be anywhere from like 5-6+ % a year, which might be better than if you got a car loan at the bank right now for maybe 8 or 9% a year, right? So, although that's true, I personally don't like that. Now, mortgages you might be able to get around 7% or so. Still, I would rather use the bank's money instead of using my own money, right? Because even though I'm not using my money when you do infinite banking, still my money gets locked up. That money is no longer able to be used because if I borrow $50,000, they'll lock up $50,000 of my money. It'll still earn interest, it's still there, but they won't let me get to it. So for that reason, it's locked up. Well, if I know I can make more money with my money, I can go and invest and do things like real estate investing, I would rather use the bank's money, especially when it's cheap, under 10%, for example. Usually for me, under 8 or 9% is kind of where I like to have that limit. If I can borrow the bank's money, I will do that all day long. If I could buy a car in fact, I just bought a car last year for 3.99%. They gave me a special offer. I took it. I said, I'm going to do that all day. Even though I had the cash to pay it in cash, even for my checking account, I didn't do it because I knew I could still take that same money, invest it, and make like 10+% a year. So for me, that was an easy no-brainer. But even if the bank said they're going to charge me 8% for my car loan, I would still do it because I want my money over here to go make that 8, 12, 15, 20% a year in real estate versus just using it to save myself the 8% on the loan. Does that make sense? So it's based on everybody who's different. If you don't know how to make more money, by the way, if you want to learn how to make that kind of money, subscribe to our Money Ripples channel because we teach about that. But if you don't know how to make that money, maybe using your infinite banking policy to buy a car is the best thing. Maybe to use it to help buy a house could be good. But in my opinion, I would much rather only use the money that the bank won't give me for certain things like investing or a down payment on a house where the bank won't lend me money for the down payment. Still, I can borrow that portion, that 20% or so from the insurance company and then use that money to put as down payment while I use the bank's money, the cheap money over here. That just gives me more leverage. Now I can buy 5 properties for the price of 1 for what those typical infinite bankers will do. So remember, kind of recap here. 1, I said don't use it as a bill pay account. 2, don't use it to be completely quote unquote debt free from banks, even though literally you are getting a loan from insurance companies. Never mistake that. You are always paying interest to them too. You're not paying interest to yourself back. That's another lie that they always teach. That's why, again, I'll leverage the bank's money all day long if it's at a decent rate. Now, here's the other thing I have a problem with infinite banking, and this is the number one thing you should be aware of, is that infinite banking is not all created equal. It's not the insurance company, and it's not even based on like just doing infinite banking. It's based on the agent and how they design the policy. Everything is about the costs that come out of the policy. Now, some people will try to tell you like, oh no, the human life value, you gotta have that death benefit. Well, that is good for someday and passing on some wealth to your children. But what about creating wealth for you right now? You know, if you have common sense like a lot of people do, and a lot of people I talk to, and I'm sure you are if you're watching this right now, anyone with common sense would say, well, if my money can make more money now, that can also allow me to have more money for my children in the future too, right? Yes. So it's not about either or, it's how do I get both? How do I still get that, I can pass on money, but I also can create wealth for myself now, so then I have even more money to pass on and more wealth to pass on to my kids. That's where you want to minimize the cost in your policy as much as you can. Unfortunately, most agents either 1, don't know how to do it, or 2, refuse to do it because it cuts their commissions back too far, and that's the only way they make money. Remember, I come from an investor standpoint. I have about $50,000 a month coming in passively already. I don't need to do this. My team, even them, like they're doing other things too. They don't really have to do this. But the reason we do it is because we want to basically kind of give the proverbial finger to all the other agents out there saying, listen, you guys are screwing people over, charging them too much on their fees. You can do it better. And that's the one thing we do with ours. I've seen so many people that waste so much money. I had one guy that came to me. He's like, hey, I'm working with this guy, popular YouTube guy on Instagram, talking about infinite banking. He's like, yeah, he gave me a good deal because he knows my brother personally. I was like, cool, let me look at your policy. He was putting in $10,000 a year, and he said, yeah, year 1 I'll have $7,000. Only $3,000 goes to cost. I said, here's the deal, buddy. You could actually be getting over $8,000 in year 1, not $7,000. It was actually like $6,900. It was just over $3,000 he's paying. You can actually save yourself over $1,000 a year doing nothing different just by how we designed this policy. He honestly did not believe us until we showed it to him, got him approved, and literally that was the case. We literally saved him over $1,000 a year in costs, all because that person just wanted to put in a little extra cost in there to pay themselves more money because that's their career. That's what they do. BS, guys. Total BS. I'm calling it out in that whole industry. That's why we're here. That's why we call it No BS Infinite Banking along with Max ROI Infinite Banking, because we don't want to BS people around like everybody else does out there. So just be aware. Don't use it as a bill pay account. Don't use it to go buy cars and houses, especially when you can get low interest, even student loans. But 3, you got to make sure you get the best policy possible. And the way to do that is get someone who lowers the cost as much as you can. Again, if you want more information on that, you can always go to our infinite banking section at moneyripples.com.